Hey, it's Mike Turner, and it's June 10th, 2022. And I've had no less than a dozen people email me and reach out to me saying, when are you going to do another market update? Because everyone wants to know what's going on with the housing market. And there's a lot. So I've been motivated to do it. And I have been watching it very closely. I'm just not selling real estate in the same way. I'm mostly doing investment properties. And so I'm focused on that. But here is what's going on. There's a lot going on. So stay tuned. I'm going to go cover a lot. So pay attention. Okay. Well, let me just jump here. So let me tell you this chart. This chart's provided by the Boise Regional Realtors. Let's see if I can actually get you zoomed in here a little bit more. This chart basically shows you this top one. It says closed sales. Let me get my face out of here. And this is demand, right? This is how much the property trend. And it goes back. You probably can't see this, but this is 2010 here, 2015, 2020. You can see like there was a shutdown, then a huge spike, property, and then it really got cooled off during the winter time, and then kind of like did okay last summer, dropped again in Christmas time, and then now we're coming back up. But and then median sales price, as you know, has gone from being low. We had our low point was around 150. Around, well, it says here 126 in 2011, and then currently it's like high 500s. It's crazy. Okay, median sales price. And inventory. So move this. You can see this is when it was really bad, and now this is where it is, and it came up, went down, and it's coming back up. Okay, this is what you'll see in the news and headlines, but what does this all really mean? Okay, it doesn't really mean a whole lot. You can't take a look at this information and be like, oh, this is something concerning. And a lot has to wait to do these charts are set up. So let's look at some different charts. Okay, so one things that I like to use is this one's called web charts. You can get these from a subscription service. If you're a realtor watching this and you don't have this service, you should really get it. It's like $150 a year, well worth your time. And then also, you don't have to be a realtor to get this, but you should be working with a realtor that has it, because then they know more about what's going on. Okay. All right. So this is a chart that shows you total home sales going back from 1999 to today, and or last year. And last year you can see like we've been going up in home sales each year pretty consistently. And then of course 2020 we had a big year, and then a much softer year last year. So sales demand peaked in 2020. Okay, I want you to write that down or think about it. Demand peaked in 2020. Coming back to that term. Okay, there's a reason why, and this might tell you something over here as a little clue. Okay, moving on. But before I do that, this shows you a chart. Move my face here again. Here, over here, you'll see that the purple, that's new construction. The light blue or turquoise, whatever you want to call that, that's resale. And then those together, this is how you get total home sales. So you can see how new construction has gone up, and then they dropped a little bit last year, but just like resale did. Okay, nothing you learn a whole lot from there. By the way, Cannon County is pretty much similar, where they had a dip last year, but not as significant, much closer to what they had the year before. This chart here basically shows you where people are buying homes. So this says 250 to 300 down here in Ada County. It's pretty much non-existent. The light blue is current year to date, and then here's 300 to 400 down here. You can see this is from 1 year. Last year at this time we had sold over 800 homes, between 300 to 400 in Ada County. Now it's less than 200. This is why our median home price is so much higher, right? There's just no inventory of homes for sale down there. If there was, they would be selling like hotcakes. And you can see that, yeah, there's more of the properties are shifting. This is between 500 to 700, a lot more activity there. Jumping down though, inventory. So this is what I want to talk about. If you've watched any of my previous videos, I've been telling about for years, like watch inventory. Inventory is your leading indicator of what's going to happen next, but not the only one. And it comes back to demand, right? So inventory has been low in our area forever, not forever, for many years, 5, 6, 7 years, because demand has been strong, really strong. It's like every time the inventory comes up, demand drives it back down, and that's why even though you see building everywhere, builders haven't been able to keep up. And so this chart, yeah, move my face, is basically let's see, like, so right here, this is the light blue, basically is 2022, right? This is year to date. And then the yellow, of course, was last year. And 2020 is the red. So 2020, right? We started that year. It was it was trending well, and then inventory was coming down, and then there was a lockdown, and then we had an explosion in demand that drove the inventory so low, and that's why we had this spike in home prices. That's why home prices from between 2019 to 2022, it's just like jumps huge, right? So if you bought a house 2019, 2020, you're sitting in a lot of equity right now. This is why it drove down the supply so low for so long, then basically, uh, it just shot up the home prices. And then starting last summer, it started slowing down, and and demand was as strong as has been in previous summers, and so inventory came up. And then we had our normal seasonal slowdown, where less people list their house, so inventory drops, and we started the year off pretty darn healthy as far as inventory. It's really low. And bump, bump, bump. There they go. Even though there was more supply coming on the market, demand was decent. We had a really good month in March, and now it's starting to climb. So, where is it gonna go? Okay, so you can see we're still below 2019 numbers. This is this dark blue. We're not in the danger zone yet. In fact, check this out. This chart's really cool because it's essentially saying that here's this top line right here, this weird looking line, that is inventory in 2008. Okay, look how high it is. Now this is what the worst it got. This is the worst we've seen in 20 plus years, right, of inventory. This is what initially caused our crash, right? Inventory got so high that it's so ridiculous that it was almost impossible to sell your house unless you had a ridiculously low price, which everybody starts competing on their way down, and that's what drives down the price, right? So we're nowhere near this. We're down here. Now this blue line, that's why I like this chart, is this kind of darker blue, whatever you want to call that. That is 2005. So 2005 was a red hot year. We had huge price gains, lots of demand, and it drove down our inventory to, at that point, were record lows. And now we've crushed those record lows more recently, which is crazy because our population is way higher than it was back in 2005. But this is how it's been. It's been super low, and now we're getting back. We're not in a dangerous area. The market's still healthy. I don't care who tells you anything else. Market still healthy, but what's it gonna do? All right, so and how long might it take it to get to dangerous levels? Okay, so we're gonna keep digging into that question. So bear with me. A couple more charts, actually a few more. So here's new construction. You can see it's doing the same trend. It's coming up. This is resale in Ada County. So you can see, yep, we're definitely coming up over the last few years. It just jumped up pretty significantly April over May. Because everyone's realizing with lower interest rates or higher interest rates, oh, it's more expensive to buy. Our prices are really high, really, really high. And all because they did such a big jump in interest rates in a short time, the mortgage payment on your house, if you're going to sell it, just went up by potentially $100, $200, $300, depending on where you price at. Like all of a sudden, it's significantly more to buy your house, even though home prices haven't changed that much, but the cost to buy it has. So, so anyway, so that's significant. This again is resale, just resale inventory. So even though this has gone up significantly from year over year, it's double. It's over 100% higher. So that's significant. Okay, it's still not dangerous. So I think this should be highlighted. You could see in a news report that inventory jumps more than 100%. Might be surprising and alarming. and definitely something you should pay attention to. Really, it's just that last year was just ridiculously low, and now we're approaching more healthy. Yeah, okay, but not to say that don't. Okay, I'm not finished yet. Don't turn off the channel yet. Okay, so Canyon County, same kind of thing. I'm just gonna run over this really quick. Similar trends. Don't need to cover it too much because it's basically mirroring what we're seeing in Ada County for the most part. This one's an interesting chart because this talks, face out of the way again. This one talks about selling odds. This is when you take amount of homes on the market and you match it with demand. Okay, so this is, and so they base it on like if there's X number of homes are for sale and this many people buy, and Y is how many people buying them. That's how you come out with months of inventory or selling odds. Okay, and when you just look at this chart, you may not fully understand it, and that's okay. The main thing I want you to take away is that this is the light blue is 2 months ago, last month is 1 month ago, and current month. So you see the month over month, not year over year, but month over month of homes. It's jumping significantly. This is in Ada County, and so this for $1 million homes, it's jumped from like 2 months. You can see it coming up, even more pronounced in the 700 to a million here, bump, bump, bump. And even this has jumped up a lot, 500, 700. Look at the difference in the month over month, jumping around from 400 to 500, and even 300, to 400 range. It's jumping significantly. Now these numbers overall are not in a dangerous area, but how fast it's changing, that's what I want you to pay attention to. How fast it's changing. Okay. All right, so here's another perspective. This is selling odds again. So I'm saying this is a 2 month rolling average. We're at 1.7 selling. There's just months of inventory basically, and that's really good, really good. But you can see that in January 2015, it's 4 months. Then it drops down significantly. It's been dropping down, and so even in 2020, it was all below one or even below half a month inventory. It was just super, super low, and that's why we had all the price increases. And then we even had some last summer, okay, or even anytime it's really low, you're going to see price increases. Now it's coming back up, and it's coming up not slowly. So who knows where it's going to go from here? Here's a deeper perspective because it goes back to 2005. And you can see in 2005, I want you to note this, is when what happened? Demand peaked. You had the most home sales on record in Ada County in 2005. And there it dropped, okay? So this is in 2005 here. This is summer 2005. It's red hot. Everything's flying off the shelves. You can't find anything for sale. It's super hard. Sound familiar? And then it cools off. Okay? And it cools off fast. And we're coming into, this is 2006. It's climbing. It's 2007. Oh my gosh. And then basically right here, this is like summer of 2007. And it's at 13 months versus, like it went down here at 1 month, and now you're just in a very, a year and a half. It just shots up like crazy. Okay. And this ironically was when home prices peaked. This is when like people are still thinking everything's okay. And then it dips a little bit in summer or in the winter time because more homes come off the market. But this is the worst it got at 16 months. And then, the bottom fell out. And basically this is 2008 here is when this is. 2008 is when this highest number here comes. And then we had the lowest demand on record. And so, yeah, by 2009, it was clear that you weren't going to sell your house unless you were at foreclosure pricing. And this is when the fall happened. Okay, we started and then down here is basically when we started recovering. Like we had to get inventory lower. This doesn't explain everything. Let me show you a better chart. I don't want to confuse you too much. Let me scroll down here. Well, before I do that, let me show you this. This is affordability. This is really interesting. So, in fact, let me show you this one. So again, affordability got the worst in Ada County in that kind of 2006, 2007 range. Okay, right here, home prices are up so high. You can see, and then down here, even like at 2018, 2019, this is home prices have gone crazy, but it's still not as expensive as it was in 2006 and 2007 because interest rates are so low, it's keeping things affordable. And then basically 2020, 2021, home prices shoot up a ton, but so do interest rates drop. So it's kind of holding like people can still afford to buy houses. And then my face, and then it just gets ridiculous up here because now they shot up. So home prices are high, and now interest rates come up, and all of a sudden, it's just crazy unaffordable. Okay. Let me show you something. I was going back through some of my old reports, and I found this one from 2019. Let's see. I want to jump here. Let's go here. So get myself out of the way and put myself down here. Okay. So I was doing back then. I was talking about there was a lot of people who thought 2019 home prices were ridiculous, and they thought we're going to see price drops coming no anytime. Okay, that was a lot of talk, and so I was trying. So I had a lot of clients and people saying like, I want to wait till home prices come down. I was like, don't do that because there's no sign that it's coming down anytime soon because inventory is too low. Well, okay, so and I was showing you some proof of that. All right, so I'm gonna show you a couple charts because they're still they help me illustrate something I want you to see now. So in 2000, this is total home sales in Ada County. So this is demand. Think about supply and demand. Simple economics. Okay, so demand peaked in 2005. Clearly, I mean it jumped a ton from year over year. Bam. Okay, and then it did okay in 2006. Still decently good, like better than all these other years. But it dropped, okay, significantly. And then it dropped again. So the thing so 2005 and 2006 is that this is one of our first indicator that there was a problem. Not our only indicator, but there's a pretty significant one when you have demand start to drop significantly. Okay. And so this chart is showing you historical inventory, okay, and demands down below. And and then this doesn't go all the way to today because again, this is chart I did a couple years ago, but it helps illustrate something. Is that when you have a market that's changing, okay, that again, this is 2007, this 2008. This is when inventory peaked, is 2008. Now remember, there was a gap between 2005, where sales demand peaked, and then inventory peaked 3 years later. Okay, housing markets don't change overnight. I mean, they're changing constantly, but like the analogy I've always used, because it's my favorite analogy to explain it, is that the housing market is not the stock market. The stock market is like a ski boat. Okay, a ski boat can change on a dime, right? It just changes really fast, right? And every day it's constantly changing, and it can change a lot within the 2 or 3 days, right? It can just drop 20, 30, 40%. It's shown, right? Very fast. And the housing market is like this big, long tanker, just lumbering out in the ocean. And then all of a sudden, this storm starts hitting it from the broadside, right? And now it's just like, oh, it's turning it. But it's not, it's such a big, heavy ship, it just takes a while for it to come around. And I'm not talking about weeks, and I'm not talking even about months. It can take years. Now there's micro adjustments, there's price adjustments, there's things like that where you're thinking you're at the right price because based on the comps, but maybe you're just looking at the wrong comps, and the market's really 25 grand less than what you think it is, and so you could be significantly off, but maybe that's just human error. Um, and sometimes a housing market can shift, 10, 15, 20 grand pretty quickly. But when your median home price is 500,000 or more, like that, those aren't big shifts. What's bigger shifts is like when you start dropping by 10, 15, 20%, 30%. Okay. That takes a while. Okay. And so our inventory peaked in 2008. Okay. I want you to note that because this next chart is really like, again, Did this chart 3 years ago. Um, so it doesn't go all the way to, all these numbers don't go all the way to today. But what this shows you, I'm going to try to illustrate because there's a lot going on here, is that again, demand peaked 2005, supply peaked in 2008, and pricing actually peaked in 2007. Okay, 2007, 2006, and 7. They had good summers, and then when did it drop? When did the bottom hit for pricing, housing prices? It did in 2012, 2011, and 2012. It took basically 4 years from the inventory peaked, okay, till it dropped. And took basically 5, 6, or 7 years, depending on where you're looking at, is for it from when demand peaked. So these are bigger cycles. Okay, they take a while. So if you were expecting to have all these amazing deals, or home prices to crash, home prices just don't crash. They fall for a long time. They can, right? So just need to get that in your head. Like it's not happening overnight. Okay, because even as bad as it was, and I don't know if we'll ever see it get as bad as it was back in 2008 through 2011 with everybody walking through the away from their houses. So many of the homes that people let foreclose were ones that they had on speculative investments where they didn't have to put any money down and they were able to buy homes, and they thought just by holding them a few months they would be making more money and then they could resell them at any time. All this kind of weird stuff was happening. Okay, and we don't have that right now. Right, it's a different market. It's more of a standard healthy market. It's not so speculative. But even under the worst cases, it took till 2011, 2012 to get to our bottom pricing, which is right here. And what happened is our inventory again was so high up here, and eventually demand started picking up, and eventually started driving down that inventory. And it kept driving it down and driving it down and driving it down until 2011. Supply got low enough, okay, that prices could start increasing. And that's what happened. And so inventory stayed low and got lower, and as the lower the inventory got, the higher their prices got. Okay, so what was a big driver in a lot of this is not really being talked about is let's see if I have it here. Yeah, this chart. So this is the interest rates, right? So interest rates in over time, right? So you can see that it was pretty high in like over 8% in the early 2000s, and in 2004 it was hovering around 6. In 2005, when demand peaked, it was kind of like high fives, and then what happened? It went up to mid sixes. And that's when demand started dropping. All of a sudden, home prices are high and interest rates are high. No, no. And so it's suffered along here. And then once until interest rates started to drop, that demand really picked up again, right? So demand picked up again. It drove down our inventory supply until it got super low. And once it got super low, it's on, right? Demand is on, right? And drove our inventory, super low, and home prices started to climb. Okay, so that's kind of where. So these kind of things, mean a few different things. All right, so let me jump back to 1 second. Is let me find. Well, I'm not seeing it right now, but let's put it back on. It's just this one here. So inventory, right? In fact, let's do this one. So again, inventory is coming back up. But right now what we're seeing is, in fact, I'll use this chart. So these, again, this is from the realtors, and you see like we have normal activity over the last number of years, and then last year is the first kind of hiccup. And now this is what we're seeing here. And so I just feel like there's a couple things that are going to happen. Here's my predictions. Is that we had a pretty good month in March. Oh, let me show you that. Go back to the top. See if I have that one handy. Not really. I don't have that one handy. But we had a really good month in March, and I think that's going to be the best month we see all year round. Okay, so normally sales peak in May and June are our best months in Ada County. I think we already had our best months because interest rates went up, and this is wet blanket on the market, and so that's what we're looking at. It was a wet blanket on the market, so I think sales for the year are going to be even less than this one, okay, than last year. So that's my second prediction. We're going to have less sales this year even than in 2021. So this means this number peak in demand, then it drops, then it's going to drop again. All right. That sounds a little familiar. It's going to drop. How much does it drop? I don't know. How much are they going to increase interest rates this year? I don't know. They say not much more, but who knows, right? So there's a drop, and there's potentially going to be another drop. So as this demand drop, guess what happens to inventory? It's going to go up. And therefore you start having things happen, where like this one, right? So this says, well, I'll use this is the chart I want. All right, this is demand. Demand's peaked, then it dropped again. All right, and then this is inventory, and then it peaked, and then it drops. So just following how normal market, it drops in 2008, right? So I think what's going to happen, okay, is at least has the potential of happening, is that demand's going to drop again this year, and then inventory is going to keep going up. And eventually what happens is essentially prices will fall. So this dark line, this is median sales price, right? So as demand comes up, eventually we hit a tipping point and home prices start to fall. Now it might take a while. It could take a while for inventory to come up. Like look here, like 2,500 homes, and then you had 4,500 homes. Like we're nowhere near these numbers yet. Forget these huge jumps. But it just depends on how people panic and put their houses on the market. Right now, people might start realizing that all of a sudden we maybe had the peak, and they're gonna like, crap, I don't want it to like fall. I better sell now. And so people start listing their house. It fills supply, demand soft because interest rates are high, and that's how that goes. So anyway, I think it's interesting. So I'm going to be watching it. So interest rates are going to play a factor on it. How much inventory hits the market is going to play a factor. How much demand comes back to life or not. If March is the peak for demand this year, then it's going to get interesting. But it doesn't mean, the one thing it doesn't mean is that home prices are going to like just crash by this year or even next year. Okay. It's going to take a while for inventory to climb up, even if it's going fast. And it could take the rest of the year. And people are still going to seem like things are semi-healthy. And they might be, but better keep watching my market reports. I'll try to not wait too long for the next one because it might start getting really interesting. And the more interesting it is, the more I want to do market reports because I like to follow and see what happens. But this is the first time in a while where I've started to see some real signs of shift. But this is the first time in a while we've seen interest rates finally come back up. I've been thinking it's going to happen. Even I thought it was going to happen in 2019, and then 2020, but they didn't. They just been letting them stay low, and they let them get even lower. So I think that was kind of a mistake. I think things got that allowed home prices to get too high. But you know what? It's all kind of politically driven and so forth, and a lot of people have done well. If you own a home in the Boise area, you've done really well over the last couple of years. So we can't complain too much. But it's approaching a potential tipping point. But a tipping point that doesn't mean it's going to drop 25% in a short period of time. But it could drop 5 or 10%. This year, by the end of this year, it's possible. Depends on how much inventory hits the market. So stay tuned. Watch more of these market reports. Talk to your realtor if you have one that's paying attention. And good luck to you. Reach out if you have questions. Always like doing these, and I always like talking shop. I like talking about the market stuff. Take care.